almost pain-free trading. Stefan's question was basically, why are you not paying attention to the back end of the curve as much at the present moment? Is it, why is that not the case? And the answer is at the core of everything we cover, isn't it, in terms of fundamentals? What have we been talking about this week? What have we been talking about this week? What's the main things we've been talking about? And if you can answer that question, that answers Stefan's question. Why are you more inclined to be watching that belly rather than the knob spread just now? If you don't know the answer to that question, you shouldn't be trading bonds. That's certainly 100% for sure. So if you're a bond trader, you need to know this. You absolutely need to know this. What have we been talking about this week? Everybody that trades bonds should know the answer to that. We've talked about Treasury refunding. We talked about that at the end of last week, beginning of this week. We talked about Treasury refunding. What else do we talk about? He was just copying us, Mike. What else did we talk about before the Fed? So we talked about Treasury refunding. What do we know is coming up this week? What did we know was coming up this week? Well, you look at your Forex Factory. Was it all about inflation this week? Yes or no? Was it all about inflation? Did we have CPI prints coming out? Did we have lots of inflation prints coming out? Yes or no? Or was it about, I'm really struggling here to see that Miguel seems to be the only person that seems to know this stuff. We were talking about refunding. We were talking about Treasury refunding. What else were we talking about? Pivots. Yeah, we were talking about the central bank pivots. What else were we talking about? We were talking about Barclays 2's flattener. Yeah? Barclays 2's flattener. What else were we talking about? We were talking about discounts to 2-year swaps. 2-year swaps. What else were we talking about? The FOMC. Is the FOMC an inflation report or a short-term interest rate report? Is the FOMC an inflation report or short? Some might say it's both, but it's predominantly about short-term interest rates. It's about the current short-term interest rate. They don't change inflation at the FOMC, do they? They can't change inflation unless they start doing some yield curve control. So the only thing they can change is their short-term interest rates. So the Fed, the quarterly refunding, the discount to the 2-year swaps, everything we've talked about has been front-loaded to the front end. So when we come into today, what's the most important line we've been showing this entire week? The belly of the curve. What's the only line that's on this actual chart? The belly of the curve. Why is the belly of the curve the only line that's on this chart? Because it's always the most important. It's always the most important. So when we look at the belly, we're reading both sides of the curve. We're able to read the front end and the back end. And therefore, we should be able to get a cleaner, easier read on these as ideas. So one of the things that we noticed this morning was we actually noticed first of all, we know that there is a very, very big premium on the 2's 5's, correct? Very big premium on the 2's 5's, yes? Against the belly. So we know that the trade is still to be buying lots of bonds. The trade is still to be buying lots and lots of treasuries. We know there is still upside room to go on the treasury market. Secondly, This morning, the 2s, 5s was now driving, suggesting that everybody that's trading front-end short-term interest rates is short rates. So buying bonds again seems to make a lot of sense. The challenge we had was that the belly wasn't moving. It was basically just the back-end front-end narrative. Now, a lot of people say, but in the short term, that looks as if this is too heavily discounted. What a load of bollocks. How in the short end is that heavily discounted when you just zoom out one little turn of the wheel, and all of a sudden you recognize that if we go back a little bit to even here, and I draw the black line, for example, is that black line down or up? And if I draw the blue line, even with the discount that was coming in this morning, is that blue line down or up? It's pretty much still flat, isn't it? So even with that drop, it's still not taking it into a sell market. It was a sell over here, but it's not a sell here. In other words, the 2s, 5 still has a lot of room to go to the downside, yes or no? Well, if we're coming into something like non-farm payrolls, is non-farm payrolls an inflation report, or is it more likely to impact on the short-term interest rates? The only inflation reports are things like PMIs, CPIs, GDPs, because they're all focused on growth and future orders and pricings. All the things that are focused on pricings are more likely to drive the back end of the curve, yes or no? All the things that are more likely to impact on Fed measurable components like, like employment, which are all short-term interest rate components, are all likely to be more impactful from the front end of the curve. So the most important single line to me now is this discount to the 2s. Discount to the 2-year, which is something we've been showing you way before people start appearing on the television talking about it. Do we all agree that we talked about this way before anybody appeared on the news talking about it? We talked about this concession to the 2-year swaps market, this line here. Did we talk about that concession to the 2-year swaps before anybody appeared on the news? And that's what we've been trading. That concession to the 2-year swaps market. Yeah? You might not like to agree with me, but unfortunately, I'm afraid you're going to have to, because that's exactly what we were talking about before all of this has happened. And you can see it's still massively discounted to the 2-year swaps market. It's never caught up. It's never gone ahead. It's never overtaken the 2-year swaps market. So it doesn't matter what your opinion of whether we did or whether we didn't, because we've got it on Twitter and we've got it on timestamps. We know we've told you it several times already. We've told you to be long bonds. This is the phase to be long only treasuries if we can. Long only treasuries. And we were right. And there's a lot of people who don't like us being right because it shows up their terrible education. We were right. A lot of people were wrong. And it was just because we're looking through these elements that we're still preferring to be long into these stories. Yes, of course, we can always sell it. We can always try and short it. We can always try and get into these short sell narratives. But when we look at the underlying shape of this and we take this from the 5-minute chart out to, say, the hourly chart, and we start looking at the underlying shape of this, when you look at that there, we can see that the belly slowly started to work its way back out of that trade, because we knew that the belly pivot was in at that stage on the macro chart basis. We knew the belly pivot was in. Why? Because the Fed's told us the belly pivot was in. The Fed's kind of highlighted through the FOMC that the belly pivot was in. So when we started to zoom into those narratives, we start trying to capture the little elements where that belly starts to diverge and we start seeing these short-term opportunities to buy bonds against a short sell on yield. And obviously that's when it started, this big buy trade that ripped the price to shreds here. And then this morning, it was obviously a little bit more awkward. There was a nice sell in the overnight session. But again, when we start to then drill down into the shorter term, it became very, very obvious what was going to happen next. When we started to see that flattener coming in here, we started to buy up bonds. And then when we started to see the flattener coming in here, we started to buy up bonds. Now, sometimes it doesn't matter how much you know, because they still do nasty things to you. You know, they still do nasty things to you. And that's unfortunate, just the nature of the beast. Take a look at that gold again from a held point of view. Take a look at the gold from a held point of view. Take a look at this. Look at that there. How many held bids are in this area? Quite a lot, right? How many held bids were in gold before the non-farm payrolls? In other words, there was a lot of buying coming in here, wasn't there? A lot of buying coming in here. Look at the amount of delta that's coming in there, and look at where the price held. And this is one of those really unfortunate things for those who think it's dead easy to trade, you know, data releases, because that looks like an absolute no-brainer buy, yes or no? A no-brainer buy, yes or no? Yeah. So you look as if you're on a brilliant trade, you're very happy with that held bid, and then the feckers go and do that to you. They wipe you out for about $1,000, don't they? And you wouldn't have got, there was no fills. I mean, they literally could have taken $1,000 a contract off you during that sweep. I mean, that's the nasty side of trading, isn't it? Mike's probably came across this over the decades. That's the nasty side of trading. The fact that everybody seems to have got the trade right with that held bid in here. Everybody's doing the trade that we were doing on bonds. That's why bonds are a lot better to do these types of trades to. You know, bonds are brilliant to do that type of trade to, because the bond doesn't do that type of thing, right? Especially something like the ZB contract, it just doesn't do it. But the gold does. So if you're trying to trade gold ahead, and this is a very, very good warning sign for you. If you're trying to do trades on gold coming into a news release, just expect that they're going to run this kind of crap against you guys. This is what you call a piss take, right? This is a 100% absolute 100% piss take. Because obviously every single buyer got stopped out and then they took the market bid. Literally everybody that had a stop in there got stopped out and then they took it bid. And that's just nasty, isn't it? That is nasty. And that really is a nasty, nasty, nasty thing there. So, you know, I mean, it is what it is. You know, you just have to accept that you don't trade gold ahead of a news release, guys. I mean, it's pretty much that simple. If you're going to trade ahead of a news release, trade the thick markets, trade the ZBs, don't even trade the ZN, trade the ZB, trade the ZN. Don't trade the ultra bond, sorry, trade the ZNs and the ZBs, right? If you're going to trade a news release, don't trade the Dow, don't trade the Nasdaq, trade the S&P, the thicker markets, trade the markets that they're not going to take as much of a piss out of you by sweeping crap like this off the table here to take the market bid. I mean, that's just as I said, that's just a piss take. That is just a piss take. But that kind of answers hopefully a couple of questions. One, don't trade gold into the news release. We closed off our positions into the, about 5 minutes before the news release came out. And we were in pretty good shape at that stage. So don't trade gold into a news release. Two, don't trade news releases unless you know exactly what you're wanting to try and accomplish from them. Three, make sure when you trade, you know what the drivers are. If the entire week is dominated by the Fed, short-term interest rates, non-farm payrolls, short-term interest rates, quarterly refunding, short-term interest rates, pivots on the central banks, short-term interest rates. If your entire week is talking about all of those things, focus more on the belly rather than the knob spread. Focus on the belly rather than the knob spread. You're bound to be in a better position in those pieces of data, guys. You're bound to be in a far better position than the data would suggest. So, so just focus on the drivers, guys. Make sure you get the drivers right, and I'm sure it'll keep you good. But our macro driver, and it's still our macro driver on this, is this here. The discount of the back end to the front end of the curve, basically. And with a discount of that size, which we called way back over here, okay, so we were talking about it way back over here, which is now a week ago. We were talking about this. You'll see it from the tweets. We told you that this was the most important element of your trade on bonds. And again, it doesn't matter how many people say, nah, it doesn't make any difference, because you all know that that's the truth. That's exactly what we were talking about at the time. So we just let it settle down, guys, and then we pick up the pieces and we get ready to go again, don't we? We get ready to go again.